This episode of the Old Dogs REI Network is brought to you by Mino Studio. Mino Studio is a pre- and post-production facility for all of your audio needs. Mino Studio's founder is an accredited audio engineer with top 40 and indie album credits. With over 30 years of music industry experience, Mino Studio can take your podcast from idea to reality. Contact Mino Studio at minostudio777@gmail.com for more information. That's Mino Studio spelled M-E-N-O, minostudio777@gmail.com.
In a world where jobs are how most people make money, one man, one desire, one challenge dares to break the mold. Welcome to the Old Dogs REI Network, where we don't work for money. Money works for us. Coming soon. Viewer discretion advised.
Welcome to the Old Dogs REI Network, where cash flow is king. Real estate investing, the means, so you can enjoy your retirement dreams. This is the show where we cut right to the chase. No sales pitch, no long monologues, just simple how-to real estate investing advice, so you can earn the passive income you need to enjoy your retirement today. And now, your host and chief old dog, Bill Manacero.
Welcome to the Old Dogs REI Network. I'm your host, Bill Manacero, and this is the show where 50-plussers and anyone else who wants to join us get solid, no sales pitch real estate investing advice to help generate real cash flow. This podcast airs twice weekly on Mondays and Fridays, and if you aren't already a subscriber, go to iTunes, type in Old Dogs, it's spelled D-A-W-G-S, find our podcast and subscribe. Well, today we have a great show. With us is Jeff Kissee, and Jeff is a experienced real estate investor that has really just gone to new bounds. He has a contracting background, a construction background, and he's leveraged that to actually move into this real estate investing area. He's a full-time real estate investor, licensed general contractor, California expert in construction and alternative energy, licensed Colorado real estate agent, and co-owner of the Capital 8 Group, LLC. He has sat on building committees for his community as well as on the board for the Home Builders Association. In 1995, Jeff and his wife, Sherry, relocated to Colorado, and together they built Lintal Construction Company from the ground up, a very successful general contracting business specializing in the construction of high-end custom single-family homes. Later, they shifted from their construction business to full-time real estate investing. Some of their specialized real estate investing training includes apartment acquisition in emerging markets, private lending for commercial properties, short sale certification, special needs housing, highly effective property management, syndication, contract analysis, and negotiating skills development, repositioning of apartments, and many more. Jeff and his wife Sherry are also big believers in giving back to their community and have been involved with their local food bank, Project Angel Heart, Miracle Flights, Special Olympics, Adopt a Family, Athletes in Action, military veterans outreach associations, and many more. Well, welcome, Jeff, to the Old Dogs REI Network.
Thank you. I appreciate that. I'm really grateful to be on, but I'm exhausted just listening what you just said. So it's been a long life, and I'm an old dog, so I'm 59. So I'm right there with everybody else.
All right. Well, you fit in with the family here.
I do.
Well, I did give kind of an extensive background there. I could have gone a lot further because you have really accomplished quite a bit. But maybe you could just kind of give us, in your own words, how you got started in real estate investing.
Well, everything is evolves. And originally, like you had briefly touched on, I was a contractor and developer in California, where I built mostly for movie stars and professional athletes in Brentwood and Malibu area. And so I did that a lot. And one of the reasons my business was so successful there was I was raised on a ranch in Oklahoma, and you didn't finish work until your work was completed. And that's kind of the attitude I took with any business I started. We did that with our construction company. And then I moved, when we moved to Colorado, we started, we meaning Sherry and myself, started building spec homes and doing fix and flips and selling them to ourselves. And that's where I became a broker, which I have to admit I was horrible at. I just did not enjoy it at all. So I immediately, after about 2 years worth, decided to give it to somebody who really enjoyed what they do as a broker. So but our business was very successful, did very well. But then we decided that we wanted to get into multifamily. And so we created strategic steps that we wanted to take to make sure that when we get into multifamily, we make all the right moves. And so we educated ourselves more and more and more. And by the way, my wife, Sherry, has the great skills, which is all on the financial side. She has a business degree. I pursued a civil engineering degree. But she has the finance side, and she's worked for big companies like Trizac and Voight and Jones Lang LaSalle, all on the development financial side. So she understood all of the financial statements and all the budgets, and I understood the critical paths. And so our melding of our skills was just a natural thing. And so we decided to get into multifamily investments, even though we started out with single family, and we made strategic steps. And in those steps was mostly education. And when we felt we were prepared, then we made the move to purchase our first property, which I believe was 6 years ago.
Now, why multifamily? What was the thing that you'd been dealing with single family homes for so long?
Because originally we were doing fix and flips and spec homes when it wasn't popular. So we were making our profit margin was really big. It was really nice. And then, of course, the recession came, and then all the construction basically stopped, and a lot of people got into fix and flips. And then when you put emotion into purchasing properties, you have a tendency not to make as much profit, and it became a lot harder, especially in the Denver area here. We've been here 21 years, and we've seen huge ebbs and flows, and right now it's just screaming hot. So we said, number one, we wanted to make a greater influence on who we came into contact. And I know this sounds funny, but our mission statement or our belief is that we want to make a positive impact on anybody we come in contact with. And we take that very seriously, and we don't tell people this. That's just what we live by. And so we syndicate or we partner. And so when we thought about multifamily, we could say, well, instead of affecting one house or one family, I can affect 100 families as I purchase a property, or 20 or whatever. The numbers go up exponentially. And that was a critical factor when we decided to go from single family to multifamily.
Wow, that's interesting. That's the first time I've heard that explanation. That's really neat. You're really approaching it as a community, impacting whether it's a community of one in a single family home or a community of many in an apartment building. That's really neat. I like that. When you first got involved, could you tell us maybe about your first multifamily purchase?
Oh, sure. So again, we have a specific focus. Again, we wanted to be the very best at what we are in our niche. And we didn't invent Google or the paperclip or anything like that. So our focus was to be the very best. And so we picked what we call B and C properties. And basically in commercial, I'm sure your viewers know this, but there's A's like brand new properties, and then B's that are 10, 20, 30 years old, and then C's a little bit older, and then D's, which is kind of like the gang member area, and I never want to go into. So we picked B and C. And there's a whole host of reasons for that. But the major thing is they're, number one, they're the mostly forgotten, but I believe they're the most tenants throughout the United States are in B and C properties, not in the A's. And so we felt that we could affect our tenants with a better lifestyle going in, and then also making our buildings more energy efficient. So this particular property was in Wheat Ridge, Colorado, which is kind of like a metroplex of Denver. And it was run by what we believe a slumlord. In fact, I had to drive by there 4 times before I could get enough courage to put in an offer because it just did not look good.
Did you find it just by driving around? Or
no. What I did is, again, it's a lot with real estate investing has to do with relationships. And you have to start out, number one, doing what you say you're going to do and being kind and ethical. And if you say you can't, perform, then don't say you can. Just say I can't do that. And so I spent most of my energy. This was a calculated step in the very beginning, creating relationships with brokers. And there's brokers that you hit it off with, and there's brokers that you don't. Well, one particular broker, a young man, and his name's Josh Newell, by the way. He's Pinnacle here in Denver. We love him. Anyway, I found out, I had coffee with him. I found out that him and his wife were going to have their first baby. I said, Sherry, let's go to Target and get some baby clothes and give it to him. And of course, Sherry hit me over the head with a wooden spoon and said, no, we're going to Baby Pottery Barn. If we're going to do this, we're going to do it right. And so we spent $250 and walked in his office and said, we just want to congratulate you. And I call it reciprocity. Sherry calls it luck. I don't care what we call it. 3 days later, he presented us with this deal, and we closed 6 weeks later.
Was it an off-market deal by chance?
Yes, it was. Uh-huh.
Wow.
Our first six deals were off-market, and that was all because of the relationships that we built.
Wow. Man, that's a neat story. It shows, taking that extra step. Like you said, so much of real estate investing is relationship driven, and just trying to stand out. These guys, so many of these brokers get calls all day long, and to be able to distinguish yourself, boy, you gave a neat little tip there. Of course, you're going to have to find a broker whose wife's having a baby, but otherwise, that's great. Yeah. That's great.
But I do try to find commonality. And to be honest with you, every time I go into a new market, because we're throughout the United States, my first 2 or 3 calls are not what you have on your listing on what's to sell. My first call is just developing relationships and asking them if they have a family, how's that's going, what they do on their off time. It's making them feel important that I'm truly interested in them. And, when I first started out, I couldn't keep my mouth shut. And Sherry said, you need to be quiet and listen. And that was a big turning point in my life. So that I would ask a question, and then I would just sit back and listen and truly hear what they're saying, and then bounce off of that. And that's really helped me out in my business.
That's neat. So you would call a broker not necessarily about a property per se, you just to introduce yourself and get to meet them, or did you usually say, I'm calling about this particular property that you have listed?
Yeah, both. But I never ended up with that way. In other words, I have a strategic plan. And the plan is okay, so I'm going to call him first time, and I'm going to say, I'm calling about this property that you just closed on. That's awesome. Congratulations. And they never get calls like that. They never get calls on congratulating on closing a property. And then I will talk to them about, wow, did you take your family for a holiday for that? And then I just expand on that. And if they did, great. If they didn't, that's okay. I tell them they should. You should celebrate your victories and such like that. And then I call 3 times. That's my critique. And I'm not saying it's right or wrong. That's just the way I do business. 3 times. And they usually jump in before the end of the 3rd call saying, hey, I have this property that you should look at. Because they'll end up asking me what my criteria is, and I'll just tell them my criteria real quick and fast, and then I let it die, and then I get back into personal questions.
God, this is great stuff. I think that just out of curiosity, what was that first? How many units was the first property?
It was actually 46, and it was actually a mixed use, which was interesting, and many learning lessons on the first property. So hopefully we'll be able to talk about those later. But we had 46, and then we had self-storage, and then we had 1 retail, a beauty salon, which I had no idea how to run, but I stumbled and bumbled, and it actually turned out well.
Wow. So you were not afraid to go where no man has gone before here.
No, that's not true. I don't mean to correct you, but when we got that apartment, when they said okay that they would sell to us, Sherry and I went out in our backyard and freaked out for like 2 or 3 hours. And then we collected ourselves, and then we were not afraid to go. So.
I love it. In dealing with this broker, for example, do you still work with him today? Is he still your broker, or have you expanded to others in the market?
I will say this. That particular broker was so touched. He ended up selling us 6 more properties. He has since sold 4 of our properties. We've made him over $1 million, and of course, we've made in the millions from that one broker relationship. That being said, we're still friends. Denver's too hard a market. We have a criteria that we go by, so the cap rates are too compressed here, so that's why we're in other areas. But we plan on coming back to him in a year or 2. But we just went boating with him and his family like about 6 weeks ago. So we stay in touch.
Oh, that's neat. Now, your criteria, you mentioned when you said that to him, this is the first time out of the chute that you're looking at commercial properties. And what was your criteria back then, and how has it changed to your criteria today?
Well, it's changed a lot just because of my delivery. Because, again, I go in thinking, oh, gosh, I don't want anybody to think I'm a novice. Well, you know what? I've decided that's okay. Put everything out on the table and say, if you're willing to take a chance on me, I am not going to be a pain in the rear to you. And so originally when I sat down with Josh, I had said, look, I'm really conservative. I'm really nervous. So my first property, I want 12% cash on cash, and then I want an 8.5 cap. And then I said I wanted a DCR of 1.65. And that's what I said. And he kind of just stared at me for a long time. And he didn't throw me out of the coffee shop, which was a good thing. And he did say, Jeff, that's going to be very difficult. And I said, that's okay. We are patient. And that's when I told him, this is my first deal. We don't plan on it being our last. And I said that if you take a chance on me, then we're very dedicated to the people we work with, which is very true. Everybody whether they're a lender, appraiser, broker, whoever, lawyers, in the multifamily business, you have to have a whole host of lawyers. You be dedicated. Once you find somebody who's good, you just be dedicated to them, and we are. And we're not a pain in the rear. And so he took that chance with us, and the rest is history.
Wow. Now, since you were new in the industry, were you still developing a team at that point, as far as, your attorneys, CPAs, your property management, and so forth?
It's easy. What I find most nowadays is that most people, they do everything else besides jumping in the water and going for it. And that's what I had, Sherry and I had done. Once we dedicated ourselves to becoming multifamily investors. It took us 9 months. And we finally met and said, we've got everybody together, but we're not underwriting deals. And so an old mentor of mine said, Jeff, if you want to get in the game, get in the game. And he said, it doesn't have to be here. And at the time, Sherry was from Minnesota. And so I started calling brokers from Minnesota to get relaxed because I knew I wasn't going to invest there. So I didn't care what they thought. And so I would just, after about 6-7 calls of just asking them questions, and I pre-prepared smart questions, what I call smart questions, so that and then I adjust that as I talk to the brokers. And once I settled in, I just said, okay, Cher, it's time for me to start meeting people. And then we just jumped into the Denver market. And like I said, it probably took me 2 weeks to meet Josh, and then 6 weeks later we closed on a deal.
Oh, neat. Now, that first deal, did you fund it, conventionally? Did you, bring in investors? How did you approach that first deal?
Well, it's an ugly property. If I sent you, it's not our ugliest, by the way, but we did fix it up. And no, this was an owner carry, and that was one of my criteria.
No way, really? When you told that to Jeff, to Josh as well?
Yeah, because when Sherry and I started out, we were overextended in buying lots and spec houses, and so after paying off all the subcontractors and everybody, we were down to about $1,000 of cash, and so we knew that we couldn't qualify. I think our credit was 700, 680, something like that. For us, that's not very good. We're always up above 8. And so we went to Josh and said, we really, and multifamily requires you to have a sponsor. In other words, they have to be experienced, and they also have to have liquidity and net worth if you're getting a conventional loan. And so we knew that our best play was our first one should be an owner carry. And that's what we found. This gentleman had owned this property forever. And so we got the owner carry, and we qualified. He just had to qualify us, and he did. And then that set us off moving forward with conventional loans. But we already have experience, and we're already qualifying for all the loans. So it turned out real good.
Now, do you still own the property today?
No, we sold that one. We sold that one, and I had 2 investors, and they came in, and we sold that 3 years afterwards, and they got a 29% annualized return and 65% IRR. So
wow.
They were really pleased. Yeah.
That's great. And did you make the money on it that you wanted to?
More. We always go in telling our investors they're going to make about 18% annualized, between 15 and 18, and to this day. We gave them 29% yearly returns. So basically, in 3 years, they got their investment back plus almost 100% on top of that.
Wow, that's impressive. Did you have to do a lot of rehab or construction on that first home?
Yeah, because we felt that he was a slumlord, this gentleman. He just didn't put any money into it at all. And so when we went into the units, actually, when we first started, Sherry and I would walk every unit, and now we hire inspectors to walk every unit. But Sherry and I walked this every unit, and after about 2/3 of the way through, she had to stop going in because it was just really bad. And so we went in and remodeled every unit with new cabinets, new appliances, new flooring. It got rid of all the bugs. And when we sold this property, thank God, I'm very grateful, but tenants would come out and say, please don't sell. You've changed our lives. And that was an affirmation of why we were doing this.
Did you have trouble finding a good contractor? I'm just joking. Okay. That's
good. I did. It's funny you say that because I couldn't use my subcontractors that I used on my homes. It's just a different set of guys. So
Oh,
I had,
really? Wow.
yeah.
So you had to find guys from scratch or referrals and so forth?
Yeah, referrals and such like that. And since I'm doing it in my own backyard, and then we hire third-party management companies because we just want to asset manage, not manage the calls and the toilets and the clogs and all that. So, we leaned on our managers to get referrals, to get them out there to help us out with all this. And by the way, as a side note, the city, when they found out how we turned around this property, because we would invite them out, they started giving us, saying, hey, you should go buy this property. Hey, you should go buy that property. They actually became an advocate for us to purchase other properties.
No way. Were these properties that were like in probate or something?
No, they were just trying to improve their city a lot.
Wow. So they would just know what was for sale, huh?
They would know that the ugly properties. Let's just say it that way.
Okay.
and so we bought one other, but that was it. Then we never went back into the city. But what the point is we had a good name, which made us feel good, and we like that.
I love it. How old were you when you bought that first property? Do you recall?
53.
53. All right. So you were an old dog then. Young. A
I
young
was.
old dog.
I was. As you get older, at least for me, my priorities changed a little bit, and it's not just you're going out hustling every job trying to make a dollar. For me, it's making a dollar and also our investors, but also helping out not only the tenants, but the environment too, because we go in and we put in low flow toilets and faucets, and so we save tons of water. We put in insulation and new windows because these are the buildings that are the least energy efficient. And actually, a group called Impact, they're out of New York, I believe, contacted us a few months ago and wanted us to talk in front of their group to show what we do to help the environment. And again, we do this on the side. We don't promote this, and it's interesting how many people feel the same way we do.
Oh, that's neat. What would you say your biggest mistake was in your real estate investing career?
Oh, well, it's this property. Not
really?
Not buying it, but not putting in enough reserves. So when we go and when we purchase a property now, we make sure we have lots of reserves, and not only for what we want to do to it, but also for what ifs. So this particular one, what had happened is we thought, okay, we're going to go in and we're going to change out the tenant base. And so because they had a lot of felons and sex offenders and stuff in there. So and we find that out by due diligence. And so in fact, the maintenance man who had all the keys to the place was a sex offender. And so we talked to him before we bought it and said, we just want to know that we're not going to ask you back. And he quit before we bought it. But anyway, so it's just reserves. Our company had my construction company had a line of credit. And so we actually loaned this property enough. Because what had happened is we did 2 tenants, and then we found out that all the tenants talk. And so everybody started leaving in droves, and then we had a bunch of vacancies, and we needed to upgrade those units. And when you're spending $10,000 a unit, that becomes a lot of money. Okay. So now we raise all the money up front so that if tenants do choose to vacate, then that's okay. Now we have the funds to go in and always upgrade the units.
Great. Now, conversely, what would you say your biggest success was?
Well, knock on wood, and we've been very successful because we do what we say we're going to do. And because of that, people know our investors. We have like a 84% reinvestor rate from our investors, and that's because I tell them you're going to make an 18% annualized return, and then I get to tell them we've never hit that. It's always been more. And so I think that's a big success that people are believing in us, our investors do. But I think the biggest thing for our success is just being honest, true, having systems in place, and never putting emotion in purchasing a property. That being said, when it comes to the holidays, and don't tell our tenants this, if we try to work out with them and never evict them during the holidays, we always try to work with them and set them on a payment plan or whatever, or try to come to an understanding. And our management companies know this, and we have 4 different management companies.
That's neat. Well, a lot of our listeners are some of them are preparing for retirement. Some are already in retirement. There are those that are also on fixed incomes and maybe have limited reserves. And what kind of advice would you give to those that don't want to get started, but maybe just don't have, a large asset base to be able to draw upon?
Well, first off, we had no reserves, so we didn't even have limited. We didn't have there's many ways that you can do this. That you can go out and purchase properties. You just have to be creative, or go freak out for 2 or 3 hours in your backyard, and then when your back's against the wall, you'll start being creative on how to perform. But I think one of the big things that we've learned throughout our 6 years seems so long to us, but everybody goes, oh, it's only 6 years. But we've purchased 10 properties going on our 11th. And the biggest thing that we found out is if you're having third-party managements, and that's what I suggest that you only do, is you create an agenda and you have a weekly or every other week call with your property management company, and you go through that agenda. When you talk on the phone with them, the way it used to be with us, they say, okay, I'll get to that. All of a sudden, we are keeping track of what didn't happen, and that's not my role. My role is to go buy another property. Their role is to keep track and get this handled. And so we make them create an agenda, and then as we talk, it puts pressure on them without us ever saying anything that, oh, I need to get this handled before our call. And that works out really well. And if it doesn't, it's better to go find another property manager that really wants to perform well.
What if they leave key items off the agenda? Do you have feedback on the agenda?
I do. We hired a business consultant because our business was growing, and so now we make strategic steps on when to hire an employee and stuff. But this lady, she's awesome. Her name's Alicia out of Denver, and she told us to do 3 things. And it's you approach the agenda. And they said, okay, I'm going to do that. And you always get them to agree, and you agree on a date. So you say, okay, so I want all the toilets changed out, in 90 days. Does that seem fair to you? And they'll say, the management company will say yes. And so when 90 days come, and you say, okay, well, where are you? Well, I haven't started that. Well, then your first thing is to say, well, I'm confused. Didn't we agree on this? And then it escalates from confused to conflicted, and then the last one is concerned. And when on the third time you say, if this isn't done, then I need to find another management company, so that everybody knows where this is going, and you don't have to get upset. You don't have to yell and scream. It's just business. And if you're not performing, if you go into a restaurant and a Mexican restaurant and you order the combination plate and they forgot the tacos and they don't bring it, you're probably not going to come back to that restaurant again. And it's the same thing. You're probably not going to come back to this management company.
Gotcha. Now, taking a look at your current business, it sounds like you've done a lot to really try to make it as good as possible. What's the thing that really excites you about your business today?
Well, we love the real estate business. We love negotiating. That's fun. And we lose more times than we win, but it's a hoot. And actually, I tell people that your due diligence really doesn't start until you purchase a property, and then don't sit back and expect a management company to perform. You need to be doing due diligence and asset managing them with agendas, with systems, to make that property perform so you can give great returns to your investors so that they're knocking on your door to want to invest in another property. So what excites us, number one is, again, I know it sounds hokey, but we're changing lives. We're trying to be the very best at what we do, and we know we're a small niche in a big market, so we try to be very good at what we do. We try to be truthful, do what we say we're going to do, and always be easy to work with, and then help change lives. And it's a positive impact, what we call it, for our investors, giving them very good returns with minimal risk, or trying to minimize as much risk as possible. And there's a whole host of reasons that we do that. And then, of course, our tenants, to try to give them a better lifestyle if we can. We just purchased a property in Indianapolis. It's townhomes. And so we said, okay, the demographic that we want here is young professional families. And so we're putting in big barbecue areas, big play area. We're putting in Bark Park. We're putting in a kid's splash pool right next to the big swimming pool. So we're doing a lot of amenities so that we change the apartment complex into a community, and it truly is. And then we have monthly functions, and to try to get people together. Because what we found out is, and this was a side benefit, is that when you create a community that tenants are proud to go to, they start referring their friends, and then it saves us on marketing costs.
I love it.
So that was a side benefit that we found out fairly recently without ever having that intention.
Now, you do invest in, obviously, outside of Denver area. Besides Indianapolis, are there other areas?
Yeah, well, again, we do a lot of research. We do a lot of education, a lot of research online to find strong, healthy economies that are growing, not at the top where you think that they're going to be stagnant, but it's the old bell curve. Every city is in a different stage of that bell curve in markets that are emerging. And our major criteria, number one, is job growth. So we try to find out job growth, but we also try to find out it's not one company. It has to be diversified. And there's a whole host. It would take probably 2 hours for me to, but we have systems, and we have our underwriters, because we now have 2 underwriters that check into different markets. So we are in, we like most of Texas, not all of Texas. If it's energy driven and it's not diversified, we won't go in there. And but a lot of Texas we like. We like Denver. We like all of Colorado. A lot of landlord friendly states, so that if you have a tenant that is affecting the whole building in a negative way and is not paying their bills or being destructive, we want to be able to get that tenant out in quick form and not necessarily in a year. And not that we're opposed to that, because there's certain states that sometimes it could take a year. We would just have to underwrite that with much more conservative numbers. And right now we don't have to. There's lower hanging fruit in other cities. So we love Midwest people. We think, and we love the Southeast. And there's probably other states or cities and actually it's not a state to state, it's a city to city thing for us.
Yeah, like what cities in Texas are you in?
Dallas, Lubbock. We like San Antonio. We actually like El Paso. Houston I stay away from only because it's my preference, but all the floods they've been having the last 2 years, the interest rate, not the interest, but the insurance rates have skyrocketed. So we're going to wait a little bit until El Nino goes, or whatever that is, that's creating those monsoon winds down there and all that moisture. But a lot of we like secondary and tertiary markets. Like Lubbock is in Texas is the number one secondary market, and we have 2 properties there, and probably will buy more. Dallas, of course, is great. Anything in the Metroplex area there. Austin is awesome, but the cap rates are really compressed. So you just have to go in and judge. Indianapolis, we love. I can give you a whole host of reasons why we love Indianapolis. But anything in Nebraska and Kansas, Oklahoma, certain states only have one or two cities, but they're really good. So you just have to do your due diligence up front and find out why it's healthy. And then what we do is when we go into a city, we just make the city into a pie, and then we cut it into fours. And what quadrant do we want to be in? And that's where we go in first, because we want to come in and do economies of scale. In other words, we want to end up with 350 to 500 units there, and then go to another city, because every city is different. We don't want to put all of our eggs in one basket, because eventually that city's economy will start to go down. And you always want to sell your property before, so that we can make these high returns that we've been doing.
Right. Great information. I could have you on for hours here. I'm probably gonna invite you back to maybe even talk about sort of the emerging markets and how you go in there and assess. I think there's some great stuff in that. Great information.
Oh, thank you.
Well, this is our little session where we sort of wrap it up. We're a little bit over our normal time schedule here, but like I said, maybe if you'll agree to come back here, we can continue some of these great areas and explore them a little further.
Oh, I'd love to. That'd be great. Thank you.
Here we go. This is our wrap it up. Favorite real estate book?
Well, again, in this business, in my opinion, you have to be an avid reader. And when I read any book, a business book, real estate book, I go in searching for that nugget. I don't sit back and say, I wonder what I'm going to get out of it. I go in looking for that nugget. And so I think one of the best books I've read, and it's an easy read, it's by Dave Lindahl, and it's Emerging Markets, Emerging Real Estate Markets. It's a real easy read, and it kind of gives you the flavor of how you go into emerging markets, the bell curve, and all that kind of stuff. And that kind of helped format where we wanted to go. And it doesn't get down to specifics, but that's okay. It's a general overview, and I like that a lot. So in my opinion, when you go to do something, let's say you have a project, a room addition, you always start out with a general overview, and then you get down to the specifics. And that's what we started out with that book, I believe.
That's great. Favorite business book?
Oh, actually, you're going to laugh at this one, I think. Again, I probably 200 business books, but it's the very first one, and it was Who Moved Our Cheese? And
I like it.
Because
I'm not familiar with that. I love it.
It's like a quarter-inch thick. It's not very thick at all. You could read it in 1 hour easily, and basically it's you're making income at one time this way. Who moved your cheese? Who moved your income? And where do you go to get it? And where is it easier to get? And that's how we came to defining investing in multifamily, because multifamily is cash flow. And so, like I tell my daughters, I have 4 of them, and I just tell them I can go on like in construction, you didn't make money unless you were working. Now with multifamily cash flow, I can go on vacation, I can be sick, and I'm still making money because the properties are generating that income for me.
That's great. How about your most valuable website for success other than your own?
I don't. Well, actually, I found I'm embarrassed because we don't have one. We're about to get one because everybody's been pressuring us because we've been getting a lot of attention. So I don't have one, and we don't have a special one. What we do is, we use websites like crazy to do, again, do due diligence, whether it be emerging markets or market data, because it's not just emerging markets, but it's like what is the market rents? And so we use a lot of broker websites. We use a lot of like CCIM website, CRM, which is a management website. A lot of great information, and in each city, there's a great information on the apartment associations. So if you're in Dallas, you just go Dallas Apartment Association, you Google that, and tons of great information, a lot of contractors, brokers. A lot of people don't access that, and the only reason I know about it is because I was part of the Builders Association when I was in construction. And Sherry and I have been actively, wherever we go, we join those associations because that really helps out.
That's great. How about favorite app?
Well, I'm not sure if many people know about this, but for us, our favorite app is Smartsheet. It's kind of like an Excel spreadsheet on steroids. And so one of the things that we needed to change was quit remembering what we needed to do. And so Smartsheet, you can share with however many people you want, but it'll automatically send up reminders to me. That's what I'm focused on, saying, hey, Jeff, you need to check to make sure that the sewer cleanouts were done on Riverstone Park Apartments. And so I don't have to remember that. It automatically tells me what to do. And so we have all of our systems in place, all of our due diligence items in Smartsheet. And so whether it be my desktop, my laptop, my phone, I access Smartsheet wherever I am, and I travel a lot, and so does Cher. And so we can always access that no matter where we are.
Great. I love it. How about your favorite quote?
Oh, well, for me, that's an easy one, and I live to it to this day because I started out as a wallflower, a very shy and timid guy. So my favorite quote is 30 seconds of extreme courage. And all that is being able to say yes to somebody and then figure out how the heck you're going to do it.
I love it.
So, it's easy to say, have an excuse not to move forward. Again, our business consultant has said that, like Sherry and I had an opportunity 5 weeks ago to go and present in front of 200 ultra high net worth investors, and it was live streamed out to another 100,000 with jumbotrons on each side of you. And I've never ever done that. And so we call our business consultant, Alicia, and she goes, well, do you want to do that? Oh, we only had a week to get this prepared. And I go, no. And then she goes to Sherry, do you want to do it? And she goes, I'm not doing it. And then we always use our company gets our vote too. And she goes, well, what does the Capital 8 group think? And then I said, well, the Capital 8 thinks if we want to grow our company, that Jeff needs to get his rear on that stage. And we did, just because that's what the company needs. So 30 seconds of extreme courage caused me to say yes to that. Was I horrified? Was I terrified? You betcha. I was hoping that I wouldn't get embarrassed. In fact, at the end of the presentation, I said, thank you for not heckling me. And but we got 31 investors from that particular presentation.
Wow. Impressive. Final question. Taking everything that you know right now, let's say, it's a horrible kind of a scenario, but let's say you just lost everything and all you had was $1,000 in the bank. Sounds like you already been there, done that, but you only have $1,000. How would you relaunch your real estate investing business?
That's one of the easiest questions, to be honest with you, because we were there.
Right. Sounds like your story, right?
Yeah, and I've told it a few times. And basically, what we did without knowing it, this was not planned. This was an oops, but thank God it was an oops. But when we decided to move into multifamily, we told our friends and family and all of our co-workers And by the way, we've never had family come in and invest with us. If you knew my in-laws, you'd know why. No, I'm just kidding. If Sherry listens to this, but no, we were telling them every time we went and looked at a property, we would tell our coworkers, "Hey, we just went and saw this," and I would show them how we were underwriting. And they would go, "Oh, that's great. That's interesting." And they would nod their head. Well, they're nodding their head subconsciously and yes. And I did not know that. And so they followed us the whole way because I was proud of what we were doing because our focus wasn't on just us making money. Our focus was on other people. And so after we freaked out in our backyard, my very first 2 phone calls was to my painter who painted my spec houses and the lady who staged our spec houses, and they both fully funded that first property. And they didn't hesitate. The reason being is because for 9 months I was telling them what I was going to do. So if I lost all my money again, which is easy to do with 4 daughters, I would just start back and start telling everybody, okay, this is where I'm going to be, and this is how I'm going to do it. And our first 4 deals, Sherry and I did not put any money in. Our investors did. Be creative. Go outside the box. Be fair to everybody. Be honest with everybody. Tell them how much you need, when they're going to get it back, and how much they're going to make. And always be true, kind, and ethical. And always keep your word. And if there's a hiccup, make sure everybody knows that and what your game plan is. And I guarantee you, you can make your real estate success. Is it easy? Not for me, it wasn't. But I know how to work hard. And when it gets to be, depressing and like you're walking through mud, every night I create an agenda for the next day. And so when I get up, I have my goals, what I need to accomplish, and who I need to talk to. And it's funny because when Sherry, we work out of our house. Sherry has the really cool office, and it has like all built-ins and a TV and radio, stereos and all this. And I have a makeshift bedroom upstairs to this day. And Sherry goes, I don't hear you talking up there, Jeff. And she goes, our business isn't growing unless you're talking to people. So that's what we do. I have my agenda for the next day, and I make sure I get through it even when I don't want to.
I love it. Well, I'll give you a copy of this podcast. You can just kind of keep it playing in the background and on those slow days.
Yeah, thank you. I appreciate that.
You bet. Well, this has been a great, a great interview. A lot of fantastic information, Jeff. And I definitely am serious about having you back and maybe pursuing one of the hot areas that you talked about and maybe going a little bit more into depth. So I would like to also let folks know that might want to get in touch with you and find out more about what you do or your projects and so forth. What's the best way for people to reach you?
Well, since our website's not up, I think it'll be up in a month, but basically email or phone, and I'll be glad to give that out, or you could give that out, whatever you'd like.
Yeah, go ahead and give it now, and they'll be in our show notes, and we'll have links to all this so people can also get that if they don't have a pen, they're driving or walking or jogging or whatever, they can always check our show notes and be able to get this information.
Oh, great. 303-940-1220. And that's our office number. And then my personal email is just Jeff Kissee. That's JEFFKI, S as in Sam, S as in Sam, EE, at Capital 8 Group. And that's just capital, the number 8, and then group.com. And that's it. Pretty easy.
Fantastic. Well, we're called the Old Dogs REI Network, and it's a tradition here that at the end of each broadcast that we have our guests give us their best old hound dog howl. Now, I know you're an Oklahoma boy, so I know you know hound dogs, and I know you've heard them. And probably in Denver, there's probably a fair amount of howling dogs. And so I'm just going to go ahead and just let you close us out with a good old howl here.
Well, I only howl usually when it's lightning and thundering, but I'll give it my best shot. So,
right.
Ow! That's the best I got.
That was great. That was great, Jeff. Well, thank you so much again for joining us and sharing your knowledge and expertise with us. We really appreciate it. And for our listeners, like I mentioned, everything that Jeff referenced will be in the show notes. And so don't feel if you didn't write something down that you're going to miss out, because we do provide that for you guys in our blog area of our website. We value your time and those of you that are listening, and there's a lot of other things you could be doing and spending your time doing, and the fact that you took this time to be with us, we were very thankful, and we appreciate your listening to the Old Dogs REI Network. So everybody, thanks again for listening. Thank you, Jeff, for being our guest, and we look forward to hopefully speaking with you soon and staying in touch here.
Oh, thank you.
And in the meantime, everybody else, just keep moving forward. And I think there's a lot of encouraging comments made today by Jeff. Just move forward. I like your quote too. I think that's something that people can hold on to as well. That 30 seconds of, how'd you say it again?
30 seconds of extreme courage, and basically it's getting you to say yes, because most people don't want to move forward because they're afraid of all these fears.
Oh, that's great. Great quote. Well, thanks everybody for listening, and we'll be seeing you next time. We are together, and God bless.
Thank you very much for visiting the Old Dogs REI Network. We would greatly appreciate if you would stop by iTunes and let us know what you think of the show. We would love if you could subscribe to the podcast, give us a 5-star rating, and write a review. The more ratings and reviews we receive, the more visible the podcast will be to others. Thank you.